In this video, I'm going to show you how you can use your tax return check to be able to buy a home and more specifically use it as a down payment on a home and if it's something that you actually should do, if it's a smart decision. So with home prices rising as they have over the past couple of years, saving for a down payment is becoming more and more difficult. As home prices go up, so does the down payment as well, because the down payment is based on a percentage of the home price. Now, you can use your tax refund to speed up your ability to buy a home. And that's what a lot of people do around this time of year. They get their refund check. Now, all of a sudden, they have an extra couple thousands of dollars that they can use to help go towards their down payment or closing costs. But the big question here is, should you do this? Is this a smart thing to do? So some things that I want you to consider. Number one is never let something external rush your home buying decision, whether that's interest rates, home prices, or even something like getting a refund check or getting a large sum of money deposited shouldn't dictate if you should buy a home now or not. This really is something that you only should use in addition to your home buying plan. So if you weren't already considering a house and just because you got a check, I don't think that's a good enough reason to then go and buy a house. Buying a house is a much bigger decision. I think if you're looking at buying a house, you need to expect to live in that home for at least 5 years. Also, you need to be comfortable with the upfront costs, moving costs, even things like furnishing a new home, painting a new home, any maintenance that's going to be required, and is a home realistic inside of your monthly budget, along with does it meet everything that you want in your lifestyle? Is it in school districts that you need it to be in? Is it close to where you want to live? So don't just let a refund check change your decision about if you're going to buy a house or not. It should only speed up your decision to make saving for the down payment and closing costs a little bit easier if you're already in the home buying consideration stage. Now, there's no time limit to use your tax refund check. You can simply put it in savings. So just because you got this check doesn't mean you have to go and use it next week. You don't have to use it next month. You don't even have to use it this year. You can go ahead and wait and put it in savings if you want to. So don't feel any urgency by getting this sum of money. The only thing to consider here is just making sure that if you have a proclivity to spend, maybe you try to lock it away into something like a money market account, or maybe into bonds or CDs or something where it's a little bit harder to touch. That way you don't spend that money and you can contribute it towards a long-term savings or your down payment, closing costs, things like that. So here's a couple different ways that you can use your tax refund check in purchasing a home. There's quite a few different ways that you can use this. It doesn't just have to be on the purchase of a home specifically. So for instance, conventional loans have a minimum down payment of 3%. You can use your tax refund check to go towards that. You can also use it to go towards your closing costs. So if you already have money set aside for your down payment and closing costs, maybe you've already been looking at a home, you've been watching some videos, getting prepared. If you have some extra money, what you could use it towards is not just only the general closing costs. General closing costs are things like title insurance, you have property taxes, homeowners insurance, and appraisal. You could also use it towards what are called mortgage points. In mortgage points, I like to think of it like prepaid interest, where you pay money up front to help lower your interest rate, which saves you money over time. And so if you have extra money, like with something like a tax refund check, you could use it to help pay down points. Now, you could also put this money into an emergency fund. An emergency fund is usually described as a certain amount of months of your monthly expenses. So for instance, let's say your monthly expenses to pay for all of your basic living necessities, let's say that's $3,000 per month. A 3-month emergency fund, which is what most people would suggest, would be $9,000. Okay, so having that could be really helpful when you're looking to buy a house. That way you don't buy a house and you don't have any money left over. You have money for emergencies, so you don't have to go into debt to pay off any emergencies. You could also use it to pay down debt. If your credit score is maybe in the mid 600 range or lower, then using your tax refund check to start paying off debt, lowering the utilization of your credit cards or installment loans that you have could help increase your credit score to make buying a home a little bit easier. You could also use it for home repairs. Maybe it's a little bit of a cushion to help you if you're looking at a home that just needs a little bit of TLC when you look at moving in. And then also moving costs is a really big factor a lot of people don't consider when they're moving. If you're moving locally, within a city or maybe to a nearby city, moving costs aren't super high. But if you're moving out of state, moving costs can start to get pretty significant. And so using that money towards moving costs can be really helpful. Now, it's really easy to document. I think people kind of feel like they won't be able to use this money when they're looking to buy a house. When you get a mortgage, underwriters are looking for what's called a large deposit. And the large deposit rules are a little bit different depending on what different types of loans you look at. But basically, anything that's not payroll, that is a large deposit that's a little bit out of the normal for your bank accounts, an underwriter might question. And they want to see, hey, where is this money coming from? Because underwriters not only have to look for things like money laundering, but they also have to make sure that you didn't just get an advance on a credit card to pay for your down payment and closing costs, or you didn't just get an unsecured loan, because when you buy a home, your down payment and closing costs have to come from acceptable sources, acceptable documented sources. So when you get a check or a transfer coming from the IRS, normally people think that's a large deposit. However, underwriters are able to take a look at this. All they need to see is either that the deposit was from the Treasury, because normally on the bank statement, if it's a direct transfer, we'll say something like IRS or Treasury on there, or they just need to see the Treasury check and the bank receipt showing the deposit of those funds. And you can use your tax refund check, no problem at all when looking to buy a house. So if you want to get started with your pre-qualification and use your tax refund check to buy a house, or even if you don't have one and you still want to get started, you can go to winthehouseyoulove.com. You'll go ahead and click get pre-qualified. They'll answer a couple questions, and then you can schedule a call with a mortgage advisor on our team who can help you through the next steps.